Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of financial updates with me, Swaraj. Today, I have with me our in house market expert, JK, and we will be taking you through the latest developments of the day. Now, the major news on the domestic front has been the Indian government cutting excise duty on petrol and diesel. While this will provide some relief to the common man, it has got significant revenue implications for the country. JK, what's your take on this and what other market updates do you have for us?
Yeah, good morning, Swaraj. Yeah, let's start with the Indian market. Uh, yeah, it was a fiscal measure taken by the government to supplement the efforts of RBI to contain inflation by reducing excess duty on petrol and diesel, as well as increasing the subsidy on domestic LPG. There's also a move to cut custom duty on some of the raw materials into intermediary products for plastic products. Estimates indicate that this can increase our deficit by another 1 lakh crore. Also, there are indications that government will go in for additional borrowing to fund these. But some other reports indicate that the revenue collections this year, which have gone up considerably, will cover these extra costs. But it's really a matter of waiting and seeing what implication it has got for the fiscal. But definitely market is slightly negatively biased because we already have a high fiscal deficit and high borrowings, and with the bond market what it is, very difficult to see how the borrowing program will be met without incurring additional financing cost. So that's the thing. But this I don't think has much implications for the rupee. Rupee in fact closed at a new all-time high on Friday at 77.54, and all indications that we will be trading around 77.70 today. There is some relief from the overseas dollar movements because dollar index has slightly weakened, and yields have also been trading somewhat lower. But bias for the rupee remains one of more depreciation, subject to, of course, RBI allowing it to happen. And then only sustained fall in the oil price will be a good relief for the rupee. Otherwise, the demand supply situation is very much skewed to the demand, and therefore rupee will keep falling, albeit at a lower pace. On the global market side, we had eventual steady close for the index in US. S&P 500 in fact went below 20% from its peak, and a close below that would have indicated that it has entered a bear market, but it had bounced from those levels. In fact, Nasdaq also bounced from an important technical point of 200-week moving average. So these are indications that market is oversold and possibly set for some recovery ahead of next Fed meeting. Also getting relief was from the Chinese move to cut their lending rate by 15 basis points, which was higher than what the market had expected. We already have a move from Chinese authorities to open some of their key areas where lockdown had been imposed due to pandemic, and that's another relief news for the markets to somewhat be on the recovery mode. Also, on the inflation front, we do not have much data from US, but we will have the core PCE price index this week, which will be preceded by FOMC minutes on Wednesday. So we will see how the Fed members are seeing the rate hike path, whether it will be more than 3% this year or less than 3%. That's the speculation that is going on. But on the other side of the Atlantic, in Europe, the German PPI once again came at a much higher level and cementing expectations of a rate hike from the ECB in the upcoming meeting in July. In June, of course, I don't think they are going to do anything, but there will be indications about the rate hike paths going forward in the year. Currencies had, of course, a big after big moves lower in the last couple of months, there is some relief for the yen, and similarly, euro is also getting a lot of attention of the European Central Bank, which the market is probably not noticing. Policymakers are concerned that the further precipitating weakness in euro may actually add to the inflation. So they actually started talking about the currency, which we have not seen for a very long time. So there is something that the policymakers have to do as a policy action, apart from just verbal intervention, to have any impact on the euro. Technically, both euro and yen are set for some more recovery against the dollar, where anyway the yields are now down. Interestingly, the 2-year over 10-year yield is further flattening, indicating that U.S. economy is probably headed towards a slowdown. A real appears through the zero line would indicate that again a recession is on the cards. Overall, market set for some relief rally because yields are down and inflation numbers are expected later in the week, probably some more moderation expected, and China reopening, and currencies, because of the overall conditions of the currencies, we will see some fall in the dollar in the weeks ahead. In fact, including the EM currencies, the indications are that there will be some more recovery against the dollar. Thank you.
Okay, so as JK mentioned, even Indian government is now fighting inflation via fiscal measures like subsidy, reduction in excise, and this will have some impact on fiscal deficit and borrowings. While German PPI numbers have come up, which puts even more focus on ECB and its rate hikes. So a lot of developments are going on. It is important that we manage our risk during this time. That's it from our end. We'll see you all tomorrow with the latest developments. Thank you.